This is Andrea from the Bailey Advantage Real Estate. And today I have someone really special. She has been in a niche of her own, making waves, being a trailblazer in that sense. I've got Rachel Oliver online with me from Clover Properties. And I wanted to just go over some of the fundamentals of rent to own. Who is it for? Why would you get into something like this? Does it make sense as a tenant buyer? So we can look at the mechanics of it. And before we jump into that, I'd love for Rachel to actually even just share a little bit about herself and her company that's been really helping a lot of families.
Thank you so much, Andrea. I appreciate you taking the time to help spread the word about rent to own and how we can help more families. Rent to own is really a vehicle to get into home ownership. So when someone has made the decision that they want to stop renting and start owning, and they're ready for that journey, like, I mean, really ready, especially if they have certain hurdles. So sometimes you go to the bank and, you've been faithfully saving that 5%. And you show it to the banker, and the banker says, yeah, your 5% is great. Yeah, your income is great. But what are all these little credit blemishes? Or you don't have enough job history, or you haven't paid off that collection item to Rogers or to Bell. And then the bank says, well, 5% is just not going to be enough. You're going to need to come in with 20%. And then that person says, oh my gosh, it took me so long to save up 5% down payment. And they think that their only option is to go back to renting to save up that 20%. But in reality, they have an option to go into a rent to own program. And the rent to own program will ultimately help solve the challenges that they're facing right now that the bank is denying them on. So the rent to own process will give them time to fix the little blemishes on their credit. Rent to own will give them time to build up a bigger down payment, and rent to own will give them a chance to go shopping for a home that they will move into today and fix all these challenges and enjoy the peace of mind and stability of being in a home of their own. That's really what rent to own is in a nutshell.
Amazing. I love that you touched upon some points there that I want to go back to. So talking about, or let's look at what the mindset is of someone who's looking at this program to see if it's a good fit. Now, you mentioned credit, you mentioned income. So I know of people who think, oh, I don't have money to buy a house. I don't have great credit. Maybe rent to own is actually what I need to be looking at. So what is the mindset that you have seen in the years of experience that you've had in this rent to own business that you can share with us and say, okay, this is actually the right mindset that we're looking for?
That's a great question. So when you embark on the journey of the unknown, any type of unknown, there are going to be potential nuances. There's going to be challenges, and you don't know what you don't know. And if you're expecting things to be smooth and familiar, it's not going to work out that way. So whether you're applying for a bank mortgage, or you're applying for a private mortgage, or you're going, the rent-to-own financing route, there's going to be a requirement for documentation. There's going to be a requirement for pulling your credit, for gathering your pay stubs. All of this stuff is tedious. It's boring. It's not sexy. Sometimes it takes, there's delays because you have to go to different places to get it. And some people just give up before they even get started because that process is overwhelming to them. So you need the mindset to say, okay, I'm going to be dealing with stuff that's not familiar. I'm going to have to do some administrative heavy lifting. But remember, this is just a one-off. You have to pull all of this stuff together. And once you do it once, that's it. You don't really ever have to bother doing it again. And then another hurdle I think a lot of people have is taking responsibility. We all have things happen in our life, and, we aren't taught how to manage our money in school. We're not taught how to manage our credit. And, people who are new to this country, they're even further at a disadvantage because they're new to the culture, to the language, to the economy. There's so many other nuances. And people don't realize how important it is to look at your credit and to be honest about your credit. And oftentimes they sweep the stuff that's on their credit under the rug, and they don't want to talk about it. And oftentimes they live in a place of, oh, well, I was, going through a divorce and he ruined my credit and he didn't pay off our joint credit cards, and he, or she. And there's always this sense of, I want to blame someone else instead of taking responsibility. When you have the mindset of saying what's done is done, I'm not blaming anyone, but I am going to deal with where I'm at today, and I'm going to move forward. I'm going to move past all of this, and I'm going to look for help. And when that realization hits someone, when they say, I am going to take ownership and I'm going to seek help from people who are authentic and professionals in this space, so many things open up for you. And ease starts to flow, opportunities start to flow, and your entire world changes. So when you change your mindset from the blame game to proactive, action-oriented state, it really changes the playing field for anyone who is pursuing home ownership. And then the third piece of it, with the rent to own part, a lot of people need to also, once they take responsibility for the situation they're in, if their credit isn't perfect, that's okay. But you have to be coachable. And you have to be communicating with the experts that are here to help you. And that's what our team does. Once you're in our rent to own program, we work with you and we guide you and we support you. But you have to do the heavy lifting nonetheless. You can't just kind of say, and not take any action, right? So being coachable and taking action, once you do get the right advice, once you do get the right support, that's really important. So those are probably the three things that I've seen that help people on this journey.
Okay, that's amazing. Thanks, Rachel, for sharing that. So speaking of helping people, how many families have you helped in the past? I would say 14 years now, right? That Clover Properties has been around.
Yeah, we're close to 15 years helping families rent to own, and we've helped nearly 900 families go through our program. And we're just warming up, Andrea. We're just getting started. Lots of work. And I really pride ourselves on the fact that we are a family-owned and operated company. We're really dedicated to families helping families. We understand, institutions and big corporations, they all have a lot of barriers and obstacles, and we want to help more home buyers overcome those barriers and overcome those obstacles through the rent to own path.
That's amazing. I love the family helping families ethos. It's so incredible because it's powerful when you just say, it's one family that's stepping up to help another one that cannot make it at the moment into home ownership. That's really powerful. What would you say, Rachel, about current market conditions, just what's happening in terms of interest rates and that effect on rent to own right now? What are you seeing in the last 2 years? And what do you anticipate for this year?
Well, I just want to say now is the right window of opportunity. So whether you are qualifying for a mortgage with a bank, whether you're going to go the rent to own route, or if you have 20, 30% saved up, you can go the alternative and private. That's totally fine. No matter what financing route you choose, regardless, this is the time because we're just coming off of the holidays and inventory is just starting to come on the market. But here's the best part. The buyers are still hibernating. So there's not a lot of action to the listings that are on the market. Most sellers are probably sitting around, when are people going to come through? I want more showings. And real estate agents are eager to do showings, but those buyers are sitting in, near their fireplaces or under their blankets and saying, oh, I'm just going to wait for the snow to melt and then I'll go shopping. Well, guess what? That's what everybody's going to do that. Right. And then on top of that, you've got this interest rate dynamic. Oh, those interest rates. I think, I think back to when I was buying my first property, I was about 29 years old and it seems just like yesterday. Not really. That was a few decades ago. I bought my first condo and I remember the interest rate was 7.8.
Wow.
And I remember my mom saying to me, so we come from Ukraine, and of course my mom in her Ukrainian accent, what are you doing? Wait till you get married. No, don't buy now. Too risky, high interest. No. And I remember saying, yeah, I know what you're saying, but I feel that my window of opportunity is now because I think prices are actually affordable. So when interest rates are high, prices tend to drop because there's fewer people who can afford the higher interest rate. But And I'm glad I did, because what I noticed is over time, as I owned the property, interest rates dropped, of course, from 7.8 to 5.25, and then they went to 4%. And when I started this rent to own venture, interest rates were at 3.5. So what I noticed in that experience is that prices of real estate started to creep up. So yes, interest rates were dropping, but the housing prices were higher and higher and higher. So what that really tells me is that if someone is sitting on the sidelines waiting for interest rates to drop and property values to drop, they're living in la la land.
Yeah.
Right now is the perfect time, because buyers are still a little bit scared of the interest rates, and they're also scared of the weather. So if you're motivated to get out there and find a property that has less competition and more motivated sellers, now is the time. I know it's a long-winded explanation for why it's a great window.
No, I think that's amazing. I like that you went into the detail there. And I would say, as a realtor, when I'm advising buyer clients, that's exactly what I'm telling them is this is your window of opportunity. We don't know when that window is going to shut on us, when the interest rates come down and the prices go up. Would you be okay with paying more for the same house that you could have bought today? So I think it's the same concept with tenant buyers as well, that this is your window of opportunity. You want to lock in that house because typically, as we know in a rent to own contract, they are locking in a future price as well when they transfer ownership to their name. Isn't that right? So I would say it's really the best time to get in is now. It was 20 years ago, but the next best time is now.
Yeah, I mean, it's the old saying, what's the best time to get into the market? Well, it's not about when you get into the market, it's about how long you've been in the market.
Correct.
Owning real estate is really a long-term play.
Yes.
And it's kind of like even the stock market. If someone's familiar with the stock markets go up and down all the time. You make money by holding stocks for 10, 15, 20 years in some cases. When you're trying to make money in a short window of 2 or 3 years, that's where you're going to get disappointed. And I think real estate follows a similar trajectory. So it's really about, it doesn't matter how much it costs to get in. It doesn't matter what the interest rates are at. If you have the mindset and if you have the money, make it happen. Get in there, because it'll level out. It'll level out over the course of you owning it. Because as you get build up equity, prices of real estate are going to continue to go up. In Ontario, we have not really seen downward motion, especially when it comes to entry-level homes. I know there's probably people going to challenge me. Well, statistically, we're seeing price drops. Well, they were artificially inflated to begin with. That's one concern, right? People were overpaying. So statistically, we had artificial inflated prices. And now we're just leveling out to where they should have been in the first place. So I think there's different ways to address that notion of real estate prices drop. But with rent to own, we're really serving that entry-level buyer. People who are just entering the market are playing in an entry-level price tag. And guess what? The competition for entry-level homes will always continue to grow. Not just do we have, existing people who are making more money and are getting ready for home ownership. We also have a lot of immigrants coming into Ontario for really well-paying jobs. And those immigrants want to set down roots. And the first thing that they're going to do is go shopping. And that creates competition. And when we don't have enough inventory, that competition allows the prices of real estate to continuously grow. And I'm not talking about, stupid growth of, 20, 30% increase in 1 year. Those are blips. We're talking steady growth at, 7, 8, 9, 10% per year. But when someone rents to own, so to your point, Andrea, we help buyers get into home ownership below market value. So we help them acquire that property through our rent to own price that at the end of the rent to own term is oftentimes a little bit below what that property would be if they didn't do rent to own. And that helps people get ahead financially.
Yeah, that's amazing. I agree with you. And I think that's one of the main benefits of being a tenant buyer in a contract like this. So now you touched upon the point of immigrants and newcomers to Canada. And we know that statistically, there are a lot of landed immigrants. That means those who are arriving with their PR in hand. So they, of course, are, if they want to get into a rent to own, they can get into home ownership instantly as well, as soon as they qualify for a mortgage, whatnot. However, I would like to actually ask you about, the folks that are landing here on work permits and temporary permits, but who are working towards their PR. Would you say this kind of a program would make sense for someone like that?
So as long as someone is planning to apply for permanent residency, that's step one. We really work with people once they have already submitted their application. So
Right.
the work permit alone doesn't constitute a qualification for rent to own, but proof of landed immigrancy or permanent residency, that constitutes an approval. And of course, income and down payment requirements have to be met as well. So there are certain people here that are looking to, own a home while they're on a student visa or on a work visa. But the challenge with that is that if there's really no evidence or no indication that they're looking to live here, there's really no point in putting someone into a rent to own scenario, because the point of rent to own is for them to take ownership of that property, and they need to be able to qualify for a mortgage. That's the whole point. We can't keep somebody in a rent to own arrangement indefinitely. We want them to exit, because when they exit, that's when they capitalize on equity, and that's when they, secure their own future through this process. So in order to ensure we have the right candidates, we want to make sure that they have their permanent residency application in, or they already have their permanent residency in hand.
Okay. So basically what you're saying is that even if a work permit holder would say, come to you and say, we've got more than a 20% down payment that we're willing to go ahead with, and we are intending to apply for a PR when the time comes up for that, would you still be able to work with, is there flexibility to work with them, or not in this case?
So I want to say there's definitely flexibility. 80% of our rent to own program is systemic and strategic. The other 20% is customized and strategic. So we would have to look at that person's or that family's personal situation to be able to truly evaluate whether or not rent to own would make sense for them. And that's really what our job is. Most people don't know what they don't know. We don't expect the average home buyer or aspiring home buyer to know how mortgages work, to understand how private mortgages work, and to understand how rent to own works, because it's just another form of financing a purchase. So that's where we would be able to guide them and counsel them based on looking at their situation. So absolutely, there's flexibility.
Okay, that's good to know. All right. So maybe what we can do, Rachel, is talk a little bit more about the mechanics of the program, just a high level view. We don't have to go into all of the details, because whoever's listening, if they want some more information, they can always reach out to you for an in-depth analysis and a look at this program and how it works. But just from a high level, how does it work? Who are the parties involved? And what does the process look like?
Okay, so let's kind of start at the beginning. It all starts with, in most cases, I would urge them to start contacting you. You're a real estate professional in a certain area, and you are an expert on being able to guide them on what is available based on what their affordability is. Rough affordability, I mean, obviously high level. I think that's the first step. Talk to Andrea or a real estate professional in your specific area. Let them know what your income situation is. Let them know what your down payment situation is. And they also have a lot of experience and connections, right? You can tell based on an initial conversation if someone should go to the bank or if someone should go to rent to own. Right. And you'll be able to guide them on their next steps after that initial conversation. And if they're a good fit for rent to own, then our team will be able to set up a call with them and essentially explain how a rent to own program would work for their situation and answer their specific questions. And if they like the sound of this opportunity and their income and down payment aligns with the minimum criteria, the next step is to do some income verification. Obviously, we get a verbal, but we do need to get paperwork submitted. And this is the same process that the bank makes people go through. They want to see pay stubs, employment letters, reports, all of that fun stuff, and then you have to have the guts to stick through. Once you submit that stuff, we will be able to say, okay, well, based on the information that we're seeing, here's what your house hunting budget will be. And you have full transparency into what you can afford. And when you have that clarity, well, then yourself, Andrea, as a real estate professional, you can say, okay, I'm going to now show listings that align with this buyer's criteria and budget. Once you have that clarity, then you can decide, okay, are we going to stick to this area? Are we going to expand our geography a little bit? You know, what are the options? Once you know what budget you're working with in terms of affordability, a huge weight is lifted. And then you basically go house shopping. That is the best part. When you find a property you love, well, then we can look at that listing and give you an idea of what the monthly commitment will be when you rent to own, and overall what your rent to own commitment would be, so that you have full transparency into what you're going to be walking into. And remember, there are no fees, and you're not really signing any, you know, your life away at this point. You're just making informed choices, and that's really where we want to take people. And once they know what their commitment will look like and they're ready to go, that's when we go to offer and actually step in and purchase that property from the seller. So the seller is not involved in the rent-own transaction at all. As you know, the seller is just selling their property, you know, standard way. We acquire that property, and the rent-to-owner moves in 30, 40 days later, and the rent-to-own contract kicks in. And with rent-own, there is no first and last month's rent. It's very different than renting. In a rent-to-own, your monthly payment is locked in from day one, and it stays the same amount. And your monthly payment consists of what the rent would be and what the to-own part would be. Because in the to-own part, we need to build up a bigger down payment, and that requires monthly installments. Through those monthly installments, you build up a bigger down payment than you came in with. And usually you end up with double what you started with through the rent-to-own process. And I'll tell you, you blink and the 3 years goes by or 4 years goes by, and you're like, oh my gosh, we've been living in this house for 3 or 4 years. Look at us. We've, you know, built up a $70,000, $80,000 down payment while we've done it. We've created beautiful memories, and now we're mortgage ready. Time flies.
Yeah, I think that's, you don't realize, it's like a compound effect, right? You're saving every month. You don't see where, you know, how much it's going to be. But at the end of that term, it does make a difference. If the interest rates change during the time of the term of this contract, does that have any effect on the mortgage amounts every month that are being paid out?
So the monthly payment in a rent to own is locked in for the full term of the rent to own. So if you're in a 4-year rent to own term, your monthly payments don't change. If interest rates in the background shift, that doesn't affect the rent to owner.
Okay.
It affects the people holding the title behind the scenes. Absolutely. The family that's holding title in a rent to own is affected by it, but it does not impact the rent to owner. The numbers that are locked in the contracts from day one stay put all the way till the end of the rent to own process.
Okay. Okay. That's good to know. And I'm assuming the amount that the tenant buyer is going to secure the home at the end of, let's say, 3 years, that would be the value of the house that he would have to then work with his mortgage specialists for, right? Like that's what they would work with to get a mortgage on, not what not what the home is valued at that point in time.
Exactly. So the house is being sold at a predetermined price, at a predetermined date. And that predetermined price, again, is locked in and it doesn't change. Now, what happens on the back end is that rent to owner is going to be qualifying for a mortgage. And depending on the lender that they go to, the lenders look at the price a little bit differently. So the banks, for example, will take it at face value. This is your rent to own contract. This is what you're buying the house for through the rent to own process. This is the mortgage amount we're going to give you based on this price. Now, in some cases, some people go to a different lender, and that different lender will say, well, the appraised value of this property is $20,000 higher. So we're going to work off of the market value of that property versus the price listed on the rent to own contract. So every lender is a little bit different, and it's really hard to predict exactly how it's going to work out. But in the end, ultimately, you get the type of mortgage that makes sense for you and your situation at the tail end of the rent to own, and you take an ownership position.
Okay. And what would be, in your experience and expertise, a typical term that you have seen for a rent to own contract?
So most terms are 3 or 4 years. And the reason for, I mean, we've also helped people rent to own as quickly as within 2 years. So it really depends on what's happening on their credit. So if they have some, deeper blemishes, maybe as a result of a consumer proposal or a result of a bankruptcy, those blemishes take a little bit longer to rebound from and to erase. So most people will need a 4-year term. We've also gone as far as 5 years for people who had more severe challenges. Like I said, we customize the process. So the average is usually around 3 years for most people. And that's for people who have, light debt. Someone who has more debt that they need to pay down, they might need that extra year, because if you try to pay off debt in a shorter amount of time, it means you have bigger monthly payments. And given the cost of living in today's environment, it's harder for people to manage higher cost of living. Plus, on top of that, pay down bigger chunks on their car loans or on their student loans. So they need that extra year. So they'll opt for a 4-year term. But generally, their credit indicates how long we'll need to put them into a program.
Okay, that's good. And then in terms of down payment, so do you require the tenant buyer to have something at the start of the rent to own contract that they put into the property
Yes.
themselves?
Yes, absolutely. An initial down payment is necessary, and it's only 5%. And remember, there are no fees, and they are not on the hook for any closing costs. So if they've scraped together 20,000, 30,000, or 40,000, and that represents 5% of the purchase price of the property their income can afford, then that's what the requirement is. And we'll accept 5% down payment, even if their credit isn't great. Whereas the banks, they want 5% and perfect credit. We're okay with 5% and no credit, because the whole point of the rent-to-own process is to fix the credit. And also we help them double their down payment through the rent-to-own process. So we're doing lots of things, kind of hitting different birds with one stone, all the while they get to live in the home that they will own, and they're getting support through the process. So, I mean, you can continue renting, and you can try to fix your credit and pay down your debt, and put aside $400 or $500 a month to build up a bigger down payment. But you always have that looming instability behind you, because what if the landlord comes knocking and says, "Ooh, the spring market is going to be an active one. Property values are going to go up because interest rates are going to drop. I want to capitalize on that, so I'm going to sell." And they knock on your door and say, "I'm selling in the spring, or I'm selling in the fall, and I need you to move out." And where do you go? So although you thought you had some security and stability and were locked into affordable rent, once you hit the streets and go back out there to find another rental property, you might be shocked at how expensive rents are.
Mm.
So why put yourself into that situation? Be proactive, preempt that, get a place of your own where you don't have that threat. And that's what rent to own offers.
Okay, and is there at any point, like let's say, this is just a question I once had from a potential tenant buyer, is there a potential to lose the down payment at any point? Is there a chance that that might happen?
So I'd like to kind of bring it back to the question of, if you get a mortgage with a bank and you can't keep up with the monthly payments, is there a chance that you'll lose that house? Is there a chance that the money that you paid on that mortgage will be lost? It's exactly the same way in rent to own. So only way to lose your money in a rent to own is not to comply with the contracts, meaning that you stop paying. As long as you pay on time based on the contracted price for the duration of the contract, you will succeed. The only time there's any volatility or potential loss is if you default on the contract as a tenant buyer. So you just have to keep up with the payments the same way if you're going to get a bank mortgage.
Right. Okay. That's yeah, I understand. Like finally, at the end of the day, a contract is a contract. It doesn't matter who the contract is with. If you keep the terms, you get to stay in the house. All right, perfect.
And so, sorry, Andrea, I just want to even draw an attention to another component. So when you are representing a buyer on a purchase and you put together a contract and an offer to purchase, along with that contract, you are submitting a deposit.
Correct.
And if the seller accepts the offer, that buyer has to buy that property. And if the buyer defaults on the contract of purchasing that property, is there a risk that they're going to lose their deposit?
And a lot more than just the deposit. So
they could get sued. There's a whole bunch of other ramifications. So I think as a society, we have to recognize that, rent to own is no different than any other contractual obligation. And when you default on your contractual obligations, there are going to be losses. It's not just a function of, rent to own, you lose money. No, anytime you default on any contract, you lose money.
Yeah. Okay. And just maybe to wrap up, I would have one final question is if someone were to approach me and ask me, so how do I know what I'm working with? How do I know what my monthly mortgage payments would work out to under this program? What's the best way to go about finding that out?
Well, it's going to take a few steps. So first of all, they have to be ready to take a few steps. It's not going to be, snapping your fingers, because to figure out what your monthly payments will be on a property, you can't just pick up a phone and, call a banker or call a mortgage agent and say, hey, I want to buy a house. Tell me what my monthly payments are going to be. They're all going to say, okay, well, we have to take a few steps. We have to figure out. So first of all, what property are we dealing with? What are the property taxes? What kind of financing rates are we dealing with at the time? What kind of, insurance? There's a whole bunch of other expenses. And with rent to own, we have the added layer of how much are you coming in with as a down payment? Are you bringing 5% to the table? Are you bringing 6% at the beginning? Or we have some people who have as much as 10% down payments initially. So your initial down payment matters. And also, how long will you be in a rent to own term? Is it going to be a 3-year window, or is it going to be a 4-year? Because payments in a 3-year are going to be higher. But if you have a big down payment, they're going to be lower. So there's a lot of considerations, and that's where there's some customization that needs to happen. So before we can tell you what your monthly payments would look like, we first need to figure out, what is your income? How much can you afford? What is your down payment? And ultimately, what's your credit situation? Those are the first 3 things that we would need to look at to be able to get to the next step. And that's look at a typical listing, because we can look at any listing, we can pull in a listing out for $600,000 out of thin air and show it to someone and say, okay, based on the $600,000 home, here's what your monthly payments would be. But then we do income verification and say, oh, you can't really afford a $600,000 home. You're actually more suited for a $450,000 property. So we have to do the math from the right angle. First of all, what's the income? And it's a very simple equation. I'm not a math person, and I've been able to master this in my head. So what is your household income of all the members in the family, side hustles, full-time jobs, any, government assistance, add it all up. What is your overall annual household income before taxes? And then multiply that by 4. And then on top of that, add how much money have you saved up for a down payment? When we talk about 5%, well, 5% is a vague number. Is it 20,000 that you've saved up? Is it 40,000? Is it 70,000? Because that will change the dimension. So household annual income times 4 plus amount of down payment. And that's roughly what kind of a property you can afford. It's the starting spot.
Yeah. No, that's a nice and easy way to look at it. If it's 100,000 times 4 plus your down payment, that's basically your affordability. That's the house that you're going to be going and looking for. Yeah, and that's
exactly.
Right.
Exactly. And then once you have a sense of those rough numbers, then your next best step is to talk to a real estate agent in your area, ideally a rent-to-own certified agent. Andrea, I believe you're a rent-to-own certified
Yes.
agent. So not only do you know the Kitchener-Waterloo market very well, you also understand how buyers can take the rent-to-own path and guide them through those logistics. So roads lead back to you, honey.
Yeah, exactly. We are here to help people. So the idea of this video as well is just to share what the mechanics are and what the market's like and why we encourage you to seize the opportunity while you still have it open for you. So I'm so honored, Rachel. Thank you so much for your time. I so appreciate it. And of course, anytime that you have any questions, for those who are listening in to this video, pop them in the comments and we'll do another video, maybe another day, to address those questions on the rent to own program. So thanks again, Rachel, for your time. Much appreciated, and hope to do another video with you soon.
Look forward to it. Thanks so much, Andrea.